Welcome back, focused learners. Today's explainer is going to absolutely change how you look at your own living room. We're unpacking a really fascinating concept called the Augusta strategy. Ever wish your next family getaway was a massive tax deduction? I mean, that question grabs your attention right away, doesn't it? 14. I want you to literally burn this number into your memory. 14 is the absolute hinge that this entire playbook rests on. You see, in the world of tax law, you don't get a lot of gray areas when it comes to hard numbers, and this is the perfect example of a strict binary rule. Section 1. Unlocking Section 280A-G, the CPA's secret rule. Okay, let's break down the tax jargon here so we know exactly what we're dealing with. Section 280AAG, which is often just called the minimal rental use rule in the industry, is a highly specific tax provision. What it does is legally allow you, as an individual, to rent your primary residence out to your own business. And you can do this for up to 14 days a year, completely tax-free. Think about the scale of that for a second. If your house commands, say, $1,000 a day for a corporate retreat, that is $14,000 of personal income that you simply do not even report on your personal tax return. It's a completely legal, explicitly codified carve-out in the federal tax code. It was actually originally created to protect residents of Augusta, Georgia, who were renting out their homes during the Masters Golf Tournament, which is exactly how the strategy got its nickname. And this quote right here perfectly illustrates the ethos behind this entire approach. At Hidden Tax, we skip the economic theater. Our source doesn't care about the optics, right? He cares about the bottom line. He's laying out a direct, no-nonsense approach to finding legal tax advantages. It's not about doing things just for show or feeling like you're somehow beating the system through sketchy loopholes. It's about taking the actual rules exactly as they are written by lawmakers and using them to your absolute best advantage. Economic theater is worrying about how things look. Sound tax strategy is looking at what the law actually says. Section 2. The Board Meeting Strategy. Executing the Playbook. So let's look at the exact flow of money step by step. Imagine this real-world scenario. Step 1. You decide to host your company's quarterly board meeting, or maybe a deep dive strategic planning session, right at your own house. You bring in the whiteboards, you cater some lunch, you get to work. Step 2. Your business literally writes a check or initiates a transfer to you personally to pay fair market rent for using your space for the day. Step 3. Because this is a legitimate, documented business event, your business gets to deduct that payment as a standard operating expense. And then Step 4, the grand finale. Because of that 14-day minimal rental use rule we just talked about, you personally pocket that cash entirely tax-free. The absolutely crucial takeaway here is this dual-sided benefit. On the business side of the ledger, you're lowering your company's taxable footprint because it gets to deduct the rental expense. It's basically treating your house just like it would a rented hotel conference room or a fancy co-working space. But simultaneously, on the personal side of the ledger, you are absorbing that exact same cash without paying a single cent of income tax on it. I mean, just think about the efficiency of that. Normally, to pull money out of your business, you'd get hit with corporate tax on the profit, and then personal income tax on the distribution or your salary. Here, the money just moves from a taxable corporate environment to a non-taxable personal environment totally seamlessly. Now, our source frames this whole maneuver quite aggressively. He says, it is the ultimate way to nickel and dime the IRS legally. Again, objectively reporting his stance here, he views this not just as a casual perk, but as an empowering, calculated method to outsmart the system using its very own rules. It's definitely a confident posture, but one that is deeply rooted in strict, unwavering compliance. He's essentially suggesting that the IRS laid out a highly specific rulebook, and it is the business owner's right, maybe even their obligation, to actually read that rulebook and play the game to win. Section 3. Building your tax fortress, the non-negotiables. Okay. Reality check. You cannot just blindly start writing yourself checks every Friday. There are absolute, strict, non-negotiables if you want to build this fortress properly. First, remember that magic number. You have a maximum 14-day rental limit per year. If you hit day 15, the entire tax-free nature vanishes for all the days, and it all becomes taxable income. It is a hard cliff edge. Second, you need strict documentation. We're talking formal meeting minutes, printed agendas, a list of attendees, actual proof that a real business event occurred. And finally, and pay very close attention to this one, you absolutely must utilize strict fair market value. You can't just charge your business $10,000 for a Tuesday afternoon meeting if a comparable hotel down the street only charges $500, right? It has to be a defensible rate. You need to call local venues, get 3 written quotes for a comparable space, and keep those quotes in your files to prove to the IRS that your fair market value rate is 100% legitimate. The source concludes his breakdown with this rather blunt call to action: stop being a sitting duck for the IRS. His overarching message is that tax codes are extraordinarily complex, and yeah, they're often really intimidating for the average person. But passively accepting them means you are leaving hard-earned money on the table. Business owners work incredibly hard to generate revenue, so why lose a massive percentage of it to passive, unoptimized tax strategies? He's really urging individuals to actively use every legal mechanism, every structural advantage out there to protect their wealth, instead of just sitting back and waiting for the tax bill to arrive at the end of the year. And that leaves us with the ultimate question to ponder as we wrap up today's deep dive. Based on the mechanics of the Augusta strategy and that strict 14-day minimum rental use rule we just unpacked, are you building your financial fortress by actively utilizing these legal, structured rules, or are you acting as a sitting duck? It's a pretty fascinating look at how compliant, strategic thinking can radically shift your financial reality. Thank you for joining me for this Explainer Focused Learners. Keep exploring, keep learning, and I'll catch you next time.